What's up, guys? It's Rob here, and today we've got to talk about what's going on in the stock market because we are seeing a whole bunch of green, and I'm very happy to see it, especially considering the fact that today is a Friday, right before a holiday weekend, and that's just great that we're going to have 3 days of the market being closed right after a big green day for pretty much every stock out there. So let's start off taking a look at what's going on. Obviously, the S&P is up in a big way, but it's not just the S&P, it's tech stocks, it's smaller market cap stocks and the Russells, and pretty much everything is green today, right? It's a very green day for pretty much everything, and there is a reason for this. It has to do with what the Fed said and what we just saw in an inflation-related report, okay? We just got the PCE, the Personal Consumption Expenditure Price Report, and it actually has been slowing down inflation-wise, right? The core PCE has been slowing down. This is, according to CNBC, the Fed's favorite inflation measure. And I can see why they like it because it's essentially tracking the same stuff as the CPI, but they use a different formula, and the number, the percentage that they get, is always, on average, a little bit lower than the CPI. So I can see why the Fed has this as their favorite inflation measure. But we got 4.9% for April, and you can see that April, for the PCE, on average, what we've typically been doing has actually been decreasing the past 2 months. And this is actually, now that we've got this most recent report in, the first time since March of 2020, that the PCE has been decreasing for 2 months in a row. I mean, this is the last time right here from March of 2020 down 2 months in a row. This is the first time since then that that's actually happened. So it is getting investors very excited. A lot of people are hoping that potentially, because we are seeing inflation come down, maybe the Fed is going to be a little bit less hawkish and more dovish towards the markets, right? They're not going to be as harsh with their rate hikes and monetary policy. We're going to see what happens. Now, it's important to note that this is the core PCE, core Personal Consumption Expenditure Price Index, excludes more volatile and seasonal food and energy prices, right? So obviously food and energy are tough items to deal with right now, right? Those are some of the highest inflationary items out there. Food and energy, but this is excluding those. Inflation overall is coming down, which is what people really want to see. Now, another interesting thing that I've noticed, what's going on with the market, if you look at the past year, we are finally actually breaking another really nasty pattern that we've seen over the past 6 months, just about. There have been a couple of times this has happened. The market, unfortunately, it's been moving down, and sometimes it's tried to break to the upside, right? It's tried to break to the upside, and then it has this tendency to break to the upside, come back a little bit, try to break up again, and get stuck at the levels which it was previously at, right? It got stopped out at the first level of gains right here on the second time it tried to break through. And that happened a second time several months later right here, where it tried to break up, ended up moving down, and then on the second attempt to break up, it got stopped out at the exact same spot. Now, we've finally broken that pattern right here, right? We've been moving down, we got bounced off of a certain point, and we tried to break up, and we actually succeeded in breaking past the previous high of the return that we've had. So it's actually, overall a pretty good thing to see, right? Considering the fact that this has happened, this is the third time. It would have been kind of cruddy if we did get bounced off again. That might have meant that we were making lower lows sometime soon. But all in all, we are starting to make higher highs on this return to the previous price levels. Now, we do still have a ways to go. I believe, from where we're at now to the previous highs that we were at, we've got still 16% in the S&P. And what's notable is that we've already gone up about 8% from the lows, right? 8.08%. So if you were buying at the lows of the market, right, when things were blood red, that was actually the best time to be buying because you would have had a whole year's worth of gains on average, right? 8% is the average amount of gains that you tend to see in the S&P over the long run. And or at least for the overall market in the long run. I think the S&P is a little bit higher, around 10%, but you would have had a whole year's worth of gains if you were just buying when the market was blood red. I mean, it's pretty cool to see, that the days that are best to buy on are the blood red days when fear is at its peak. And unfortunately, that's when most people are selling. They tend to not be net buyers, but overall, those do tend to be the best days to be buying. I think the wealthy understand that. I think the wealthy do tend to be buying more on these red days. And, retail will learn eventually, right? I tend to be a bigger buyer on the very red days than the green days, but that's just my opinion, right? It's not a guarantee. Obviously, we could move down further, right? We could get bounced down for whatever reason. If we get some bad news coming out, I certainly hope it doesn't happen. But leading into the weekend, I think this is a very good place for us to be at, right? I'm very happy to see that we are experiencing a lot of green, a lot of positive momentum, that we're breaking past previous resistance levels, and that the Fed might have some reason to be a little bit less hawkish in the future. We're going to have to see what they say. Obviously, they want to stomp out inflation, so it might take a month or two before they really start becoming more dovish, but we'll see what happens with it. Investors, at least, are expecting that stocks could be doing better in the future, right? That's why we're seeing all this buying. So other than that, guys, keep in mind, none of this is financial advice. Obviously, you guys know the drill. And other than that, guys, have a great long weekend. There's no stock market on Monday. It's closed. It's Memorial Day, I'm pretty sure. So make sure to enjoy that. Do something fun. Don't think about the stock market. You don't need to. It's looking pretty darn green today. And other than that, have a great day. I'll see you in the next one. Bye.